Hello Moon Gang, I hope that you're having a great day. This video will be a quick wrap up for both AMC and GameStop for today, Tuesday, May 11th. I'll be talking about some of the key short interest data points, and I'll mainly be focusing on the cost to borrow, the short borrow fee. It seems to be a hot topic in the community right now, so I just want to offer a bit of clarification. And then I'll also be doing a very quick technical breakdown of both of these stocks at the end, so we know what price levels to pay attention to, not only tomorrow, but for the remainder of the week. Before we hop into all of that, just so you know, AMC and GME both had a green day, which is absolutely music to my ears. AMC closed out the day at 10.05, which was a gain of 3.18%, and GME closed out the day at 146.92, which was a gain of 2.58%. Awesome. So let's hop into what's going on. Just so you know, from a higher level view, the S&P 500, this is some of the technical levels I was laying out yesterday. And surprise, surprise, not only did it bounce off of previous support that we saw from late May, but also it was this technical trend line. Tomorrow, when the market opens, really throughout the trading day, look for this trend line to hold around 410, 410.50, around there. Look for it to really break out and get back up into this channel. This is the main technical breakdown. Please don't panic. The market only dropped 0.89% today. It wasn't even 1%. It's not doomsday. Don't fall into that whole fear. As of now, things are still perfectly fine, A-okay. So now let's talk about how AMC is sitting. So here's what we have today. There was a net return of 400,000 shares on AMC today, which puts the current short interest, estimated short interest of the free float at 23.66%. So overall, if I had to guess, around 152.5 million shares on loan. And just so you know, we started off today around 100%. Tomorrow, when Ortex updates, I would imagine that the utilization is still 100%. And if it's not, it'll be in the high 99. So before we get into the cost to borrow, I also want to clarify that the days to cover based on the 2-week trading average is 4.56 days. I get this question a lot. Do we have to worry about missing the squeeze, especially if you're transferring your shares, say, from Webull to Robinhood? I really don't think you have to. Honestly, right here, based on the shares that are most likely betting against AMC right now and its daily average trading volume based on the past 2 weeks, it's going to take the better part of an entire trading week for them to get out of their short position. So please, please don't worry about missing a squeeze. It's not going to happen in pre-market, post-market, or really even one trading day. Right now, the data is saying that it's actually going to take almost an entire trading week. So you really don't have to worry about it. Now let's talk about the hot topic of the community, cost to borrow, also the short borrow fee. Right now for AMC to start today, actually for yesterday, it was 133%. And today, the average cost to borrow was 218%. So what does this mean? Cost to borrow is really what you have to pay to borrow shares from someone to take a short position. That's not what they pay per day. That's what they would pay if they were to hold it all year, but they pay the proportionate amount per day for to swing, to really not even swing a short position, just to have the shares on loan. If they do short or don't short, that's all up to them. But just for them to loan this, really look at this, 153 million shares. And I did do some research on this. Are they all paying this high fee? No. Some brokerages do have a dynamic setup based on the fact of whatever the going rate is, that's what you're going to pay. Other ones have a deal with their broker where it's no, whatever they took at the beginning, that is going to be their locked-in fee. So there are a decent amount of people who are renting shares. We know this. 153 million paying a huge rental fee to potentially short the stock. This is sky high. Actually, in fact, it's not a record for AMC. If you look in late 2020, actually, I could show you that right here. At one point, it was above 280%, 343%. So even though this is incredibly high, in fact, it's not a record, which I think is actually impressive in itself. So basically, on Friday, 149, yesterday, 133, today, up to 218%. Now, the main question I'm getting is, why is this data different? I know a lot of people are looking at Stonko Tractor, iBorrowDesk, and Fintel. In all honesty, I have no clue where Stonko Tracker gets their data. but I did find some information for you about iBorrowDesk. Like, it's fair to point out these discrepancies. When you see something that doesn't make sense, as a community, we shouldn't attack each other. We should talk about it and get to the bottom of what's going on, and that's exactly what happened today. So here, iBorrowDesk, 81.2%. And then we also have Fintel. If we scroll down here, 81.2%. Well, that doesn't make sense because right here, Ortex is showing us 218%. What gives? Well, if you do a little bit of digging right here, all iBorrowDesk data is sourced from interactive brokers, as in one data source. So the data is not wrong, it's just not complete. They're literally talking to one person. And if you actually look at Fintel's as well, when I was searching it, they said that they're getting it from a leading prime broker. So I don't know what prime broker. If you happen to know what prime broker, feel free to reach out to me. But same thing with Fintel. So both iBorrowDesk and Fintel are sourcing it from they have one data source. While on the other hand, why do I trust in Ortex more? I've talked to Ortex directly. In fact, they're an amazing team. Literally, just yesterday, I was talking about how it would be cool if they had live changes for the cost to borrow. And then guess what? This morning, it's there. It's live. They are very, very responsive to our community specifically because they're all about the fight we are in. I've talked to Ortex. They love that this entire saga is bringing more people into the stock market because just like me and like many of you, they believe that it's good to have financial literacy and understand the data of the situation and truly understand what's going on. And Ortex is specifically supportive of really all of us space apes. So anyway, yesterday, this wasn't here in terms of live updates. They threw it up there for us, which I think is absolutely awesome. But anyway, speaking with the team at Ortex, they're not like iBorrowDesk. They're not like Fintel. They are not sourcing it from one data source. Ortex is getting it from 85% of all prime brokers. That 85% includes the main prime brokers. So that doesn't mean that they're just missing out on 15%. In fact, like it's probably even less than that because they do get it from all of the prime brokers. So I'm not saying that Ortex is the complete picture of what's going on, but it's very, very close to it. And it's way, way more complete than iBorrowDesk, Fintel, Stonko Tracker, all of those. It's just getting more data. It's giving us the complete picture. That's why there's the discrepancy. To be completely honest, the one thing I don't understand right now is the cost to borrow minimum is 134.62%. I don't quite know why at a minimum it wouldn't include the 81.2 that we're seeing on both iBorrowDesk and Fintel. That's a very fair question. In fact, I wrote them an email. As soon as I get that response, I'll figure out why that isn't in there. The first thing that pops in my head is maybe that Ortex doesn't source from interactive brokers, and that could explain the discrepancy, and maybe these two are only sourcing from interactive brokers. But that's just one theory. As soon as I get a concrete answer, I will share it all with you. But in the end, just know that Ortex is getting more data. It's a more complete picture. In terms of GameStop, today there was a net return of 42,000 shares. The current estimated short interest is 22.14%. As of yesterday, the days to cover on the 2-week average is 3.79 days. Same thing, GME squeeze, you don't have to worry about missing it. And the cost to borrow right now, just for a relative rate on GameStop relative to AMC, it's actually 1.89%. And even that is kind of a higher fee. If you were to check out Tesla, Apple, any of those just classic blue chip stocks, you'll see that the cost to borrow is way cheaper. So it really does illustrate how AMC is the definition of a hard to borrow stock. If the demand to short is high, but the supply of shares that are willing to be lent out is low, that's when you get into environments where the cost to borrow skyrockets above 200%. It's literally just classic supply and demand. Demand is high, supply is low, so the cost is proportionately high. With all that being said, we already talked about right here, the S&P 500, it is successfully bouncing. Let's look for that to hold, and on top of that, get back into the wedge. In terms of the daily chart, let's start out with AMC, just so you know. It's trading at 10.09 right now, closed out the day at 10.05. Past week, up 7%. Past month, up 16%. Right here, we did have that third bounce at this trend line, and it looks like it's slowly grinding its way back up. I personally want to see how AMC reacts to a test of this trend line. Of course, I want it to break out. From there, I will then be watching 12.25-ish. In terms of a smaller time frame, right here. We kind of had this rejection. I mean, I guess more so because it closed below 1013, 1015-ish. So I want that breakout. From there, 1050, it's a key psychological level. We have seen some support and resistance right there. I want to break above 1050. I actually rejected at 1048 today. Above that, I will be watching 11. AMC above 11 is amazing for us. It's going to put quite a bit of pain on the shorts. And on top of that, don't forget, not only are they losing on the position, but they have to pay that massive borrow fee. If for whatever reason we're rejected at one of these levels, I'll then be looking for support at 10, key psychological level. Below that, 975. Now let's switch gears real quick to GME. I brought this up to you yesterday of how we closed below it. Technically, we closed below it again, but we are making gains back. So on a daily perspective, the main thing I'm paying attention to for GameStop is to get back into this overall wedge. On a smaller time frame, the 30-minute chart, very, very nice bounce. Not only did it bounce off of this key technical support at 138, the RSI was so overextended, so severely oversold. It was nice to see that follow through. It was rejected at 150 today. I had resistance at 151. I would say that's close enough. So I'm looking for that breakout. And then from there, I want to see it get back up into the wedge. And also that would most likely align with 160. But really, let's just chalk it up to 160 is that first thing I'm looking for GameStop to get above. If this does not hold the breakout at 150, I'll look for support once again at 138. And from there, I have a support at 132. So that's what's going on today with both AMC and GameStop. I hope you understand a little bit more about that data discrepancy related to the cost to borrow, especially in AMC. Right now, it's sky high above 200%, which is incredibly, incredibly high. And yes, that is super good for us because that means anyone who's betting against us is getting very, very expensive for them to bet against us. So not only do they need the stock to drop, but they need it to drop very, very soon because it's simply costing them more and more money to continue to swing the position. So that is looking awesome for us. And really, it's also just looking good that the stock is trending upward. AMC up 3.18%, GME up 2.58%. I absolutely love these days when both of these stocks are in the green. A big, big win for us. With that being said, I would love to get your thoughts on both AMC and GME in a comment below. Also, as a quick side note, it was well known yesterday that all of us YouTubers who create update videos, especially related to AMC, they were not being promoted to absolutely anyone. So if you enjoy this video and you want to share the information with other people, I would appreciate those other forms of engagement, dropping a like, leaving a comment, and if you haven't already, don't forget to join up with the Moon Gang by hitting that subscribe button. Not only does that help with me, but if you have another favorite YouTuber who's talking about this subject matter, please don't forget to do that same type of engagement because it really does help out with the YouTube algorithm. Until I catch you next time, from me and Chair, best of luck in the stock market.